This is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol PLUG. As you can see here, red candle is forming today after the nice close yesterday. Um, On the 9th, there was this close above the middle Bollinger Band, and then which is the purple dotted line, currently at $2. And then yesterday there was a close above the middle Bollinger Band and EMA's 4 and 8, a white Marabuzo candle form. There was no wicks on yesterday's candle. The low of day was the open, and the high of day was the close. So it was a small candle, but a strong day for plug yesterday. And then today, a red candle is forming, and possible. Yeah, so the key going forward here on this chart is to hold this middle Bollinger Band at $2. So if the dotted purple line, which is kind of hard to see right here, if it holds and candles start forming above the middle Bollinger Band and EMA's 4 and 8, that will signal the start of a new uptrend. If the middle Bollinger Band turns into resistance, that would signal the continuation of this downtrend that started back here on November 9th with the close below the middle Bollinger Band. So these candles right here are in the process of trying to turn the middle Bollinger Band into support. Okay, let's look at the next chart. The next chart is another daily chart, and each candle represents 1 day of trading, and this is the 50, 100, and 200-day moving average chart. And as you can see here, the candles were trading below all three levels. Back here in October, then they worked their way above, and then in November there was this close above the 200-day moving average. Plug failed to turn that level into support, and currently the candles are forming below the 100, 50, and 200-day moving average. The 100-day moving average at 213 is the key level to break. A close above the 50-day moving average at 221 would put the 200-day moving average at 237 on deck, and that's the line in the sand. Bulls, you'd like to see the 200-day moving average turn into support for more upside potential. With the move today, now there's this bearish crossover on Fasto. Fasto was in the 50 to 80 bull zone yesterday. Now it dropped back below it, and then RSI is up here at 45.85. Bulls, you'd like to see RSI above 50 in the 50 to 70 bull zone, so keep an eye out for that. That would show that the chart was heating up. Yesterday and the day before, it was a light volume bounce, so keep an eye out for a volume spike. Volume has been light, and the MACD down here is pinched. So bulls, you want to make sure the MACD line stays above the signal line. Okay, let's look at the next chart. The next chart is a 15-minute chart, and each candle represents 15 minutes of trading. And then, as you can see here, there was this downtrend on the 4th, 7th, and 8th, and then on the 9th, this new uptrend started with this move above the middle Bollinger Band, which is the purple dotted line, and the candles have been riding EMA's 4 and 8 support higher until today's open, and then the open today, middle Bollinger Band support broke, and now candles are forming below EMA's 4 and 8, and they're testing lower Bollinger Band at 2014 support. So the key now for the bulls is to hold this lower Bollinger Band support and then start forming candles above the middle Bollinger Band. Because if the middle Bollinger Band turns into resistance, that could signal the start of a new downtrend. So yeah, it's real important that the bulls take control here. Otherwise, the chart may break down, which it's already starting to do here at the open. And then this is the last chart. This is another 15-minute chart, and this is showing the 50-day moving average is the green line, the 100-day moving average is the gold line, and the red line is the 200-day moving average. And as you can see, the close yesterday was up here above the 200-day moving average. At the open today, that level failed to hold, and the share price quickly dropped down to this 50 and 100-day moving average support levels. They are the line in the sand. So going forward, bulls, if the 50 and 100-day moving average turn into resistance, that's going to equal downside risk. And if they hold, bulls, you want to see candles forming above the 200-day moving average at 2052. If that level breaks, that's going to equal upside potential. So right now the candles are in between the either head higher or going to break down levels. So going forward, candles forming above the 200-day moving average on the 15-minute chart are going to equal more upside potential. Candles forming below the 50 and 100-day moving average are going to equal downside risk. And so, yeah, plug opened with the MACD bear cross. As you can see, the MACD line crossed the signal line to the downside, and there was this big volume spike to close yesterday, so it looked like profit takers into the close, and then now with the big down open. Um, and then up here you can see Fasto is corrected. Fasto is now at oversold levels down here below 20, and RSI has dropped out of the 50 to 70 bull zone. Okay, thank you for viewing this play chart. Please check out our website at mychartcoach.com and our YouTube channel at mychartcoach.com. Okay, thank you.